So, to start with, let us talk about the typical import transaction framework. What is this import transaction framework? How this game is played? So, some of the ideas you already must be having, but this particular lecture will help you to recapitulate your knowledge about how this game is played between the supplier and the buyer, that is the importer, that is you. So, you as an importer approach the supplier, identify the supplier, potential supplier who is able to give you good offer of the goods, who can meet your conditions, the usage conditions, your needs of the packing, all the things he is able to provide to you, and then you identify such exporters and you zero in on some particular supplier to supply you the goods internationally, and you enter into a export contract. For the exporter it is the export contract, and for you as an importer it is a international purchase contract. So whatever the name is there, it is a trade contract between the supplier and you as the importer. So this particular purchase contract, international purchase contract, that is signed between the supplier and the importer, that is you, serves as a template for the complete transaction. But this complete transaction is normally of the shape of this typical transaction, wherein the exporter, that is the supplier, after getting the international purchase order or the export contract, prepares the draft LC conditions. So we are assuming in this typical import transaction framework that the payment method is letter of credit. That is the most balanced method of payment, but little costlier. But this is the most safe for both the parties. We are assuming that in this framework we are talking about the letter of credit transaction. So the exporter prepares the draft LC opening instructions based on this international purchase contract that you sign, based on your negotiation, based on your knowledge, and these draft LC opening instructions are given to you for the further processing with the issuing bank that is going to issue the letter of credit in favor of the supplier. So what you do, based on this draft LC opening instruction, you do the due diligence of this document and prepare your own LC opening instructions, because this LC opening instruction is a very, very important document that has to be given to your bank, your local bank, that is the importer's bank in your country, that is also called the issuing bank, because it issues the letter of credit based on your LC opening instructions. And these LC opening instructions are based on the draft LC opening instructions that are drafted by the supplier. So the letter of credit that is opened by the issuing bank, that is your bank, is advised through the supplier's bank in the supplier's country. So this bank in the supplier's country advises this LC and acts as the advising bank, and the supplier has the option of either accepting the letter of credit or rejecting it. So if the letter of credit is in alignment with the draft LC opening instructions that was prepared by the exporter, that is the supplier, in majority of the cases, the supplier will not reject the letter of credit. And the moment the letter of credit is accepted by the supplier, the LC come into effect. So the payment is now guaranteed by the LC issuing bank that is going to charge you for this service. You as the importer, you have to pay the services of the issuing bank. Some LC issuing charges will be paid, or any other service that is related to the LC opening by this bank. All those charges have to be paid by you as an importer. And that is the reason LC is a little expensive proposition for making the international payment. I will explain in more detail about it when I will talk about the international payment methods in this section itself. So based on the LC, the exporter will prepare the shipment, the supplier will prepare the complete shipment either by manufacturing or by procuring from the market, and will dispatch the goods either by sea or by air depending on what has been agreed between you and the supplier. And the moment goods are loaded, for example, in this case, let us assume it is the sea shipment. The goods, as soon as they are loaded on the ship, the documents will be procured by the exporter, that is the supplier. That would include the transport documents. It has already prepared the commercial invoice, the certificate of origin, packing list, and the other certificates that have been demanded by you, including the quality certificate or any other mandatory certificates that are required by the customs and the border control of your country at the port of entry. So, what are the prescribed documents that are mandatory will be prepared by the supplier, that are to be supplied by the supplier along with the goods. So, those documents will become the part of the LC presentment documents, which means the supplier will procure all these documents, original documents, and will present these documents to the negotiating bank in his own country. So, like advising bank, the negotiating bank is there, the local bank of the supplier's country, and that bank will collect all these documents and will negotiate those documents with your local bank, that is the LC issuing bank. And if all the documents are in order and the shipment is already made, the transport documents are also there, it will make the payment to the supplier, and these documents will be sold to you by your bank, that is the LC issuing bank. You have to pay any pending amount, whatever is there, against the letter of credit, and you will collect all these documents, and you will use these documents to take possession of the goods that might have already reached in the port of entry, that is the port, the seaport, or whatever the agreed place is there as per the contract. At that point, you will get the goods cleared from the customs depending on what has been agreed in the contract and what are the international commercial terms. You may have to get the goods cleared at the customs and take possession of the goods from the shipping company by providing the original transport documents along with the other commercial principal documents, so called LC documents. So, these documents you will be using to get possession of the shipment goods. So, as you can see here in this particular typical import transaction framework, you can see the flow of the goods from the port of loading to the port of discharge via the ship. So, carrier will take the goods at the port of loading and will deliver the goods at the port of discharge. And the flow of the documents you can see here from the supplier to the supplier's bank and then to the issuing bank, your local bank, and your local bank will give this document to you, and these documents will be further given to the carrier or the local government, that is the customs department and the border control department, so to get the goods cleared. So, this is the flow of the documents. You can also see in this typical import transaction framework the flow of the payment from the importer's bank, that is your bank, LC issuing bank, to the negotiating bank and then to the supplier. So, this is the flow of the payment, and this is the flow of the documents, and this is the flow of the goods. So, you can see all these different flows in this typical import transaction framework, and you should focus on, very importantly, what is the role of the issuing bank, that is the LC issuing bank, that is your bank. What is the role of the home country customs border control, that will prescribe certain documents, very important documents, mandatory documents, without which goods will not be cleared by your customs, your country customs and the border control. So, what is this role of the home country customs and border control, and the role of shipping company that is going to deliver goods from the port of origin to the port of destination, that means the port of entry, and how these goods are going to be shipped by the shipping company and how these goods are going to be handed over to you using the original documents in the sea shipment. So this is the typical import transaction framework that you should be absolutely clear about in order to understand further in this course the complete and entire import documentation and procedures. So this is the first thing you should have the fairly good knowledge about to become conversant with the important things that are going to help you in understanding further learnings in this course.